Yeah, very excited about this conversation today with Dirk. Dirk is a venture capital investor. He invests in software, IT, cybersecurity, Industry 4.0, new materials, and clean tech, early stage as well as growth. Actually, the fund eCapital has been around for more than 2 decades. So the fund has been active for a long time. But Dirk himself actually is an electrical engineer by training. But he's also started companies himself before. He's been an executive in companies, and now he's an investor. So I think it's super interesting to have him here because we can basically talk about the investing side. We can talk about starting a company, but we can also talk about the potential buyer side of products in larger companies. So yes, very, very excited. I think maybe, Dirk, we start with a fun fact. I also found out that you were or are a licensed DJ. Is that correct?
Sure, Rasmus. Well, first, thank you so much for inviting me for actually kicking off this very exciting series. I feel very honored, and well, normally we would do it at the campus, right? So I'm very happy we could switch. Very honored. And the fun fact, yes, indeed, I'm a licensed DJ. I grew up in Eastern Germany, and to be a DJ, right, to be on stage somewhere, you needed a license. I think today you don't need it anymore. So when I was like, I don't know, 16 or 17 years old, my parents didn't know. So I got that license, and that was actually not just the license for, doing DJing, but it was the license for, being 17 years old and going into bars and staying there all night. So that's the story about this.
So there were a few other reasons why you had to get the license. Okay, very cool. No, that's a good fun fact, and yeah, unexpected, I guess, in terms of what the other things what you are doing. So yeah, no, let's get right into it. Maybe of the kind of different roles, I mean, you've been in your career so far. What have you enjoyed the most? Like, is it being a founder? Is it now being an investor? Was it kind of being an executive? Like, and what were maybe kind of the learnings at each of these stages you made?
It's a very hard question. Actually, I enjoyed everything. To be honest, everything at a certain point in time. I would be lying if I would say the entrepreneurial phase was like the best in my whole life or so, because I so much enjoy what I'm doing now, and I purposely like switched to the other side. So I've been an entrepreneur myself in the 90s, actually pre the dot-com bust, so I lived through all these years, and I've seen deep tech startups from all sides, right? So I did my first startup in actually optical telecommunication, so fiber optic data transmission, so very, very physical. Did operation systems for telecommunications providers, went into cybersecurity, and on all sides, right? So I've been also on the corporate side for a while, and I really enjoyed all these different kind of phases, specifically because you can learn so much at these phases. Also, I have to say that there was a point in time when I really wanted to find back more or less what I experienced as an entrepreneur. So when you were in your 20s and the world is yours, the wall was down. So for those of you who just heard this kind of situation from your parents or from your grandparents, when there was a wall, so the wall was down, and so the world was ours, and so it was a super exciting time. And I don't want to miss each and every moment during these years. And so you go more mature, let me put it this way. And then in a corporate, I spent several years in a corporate, until at a certain point in time, I decided for myself, I want to go back to like the startup scene, right? I wanted to really move things. And specifically, I wanted to, again, have this feeling that, you actually become, when something's really happening. I mean, after, blood, sweat, and tears, many things go wrong. And then there is this moment, which is magical, when things come together. Your product really has found like its market, and and the first customers, and then there's an avalanche of requests coming in, things work, and this is a moment, this is a feeling that I wanted to find back. And so that was the moment when I switched sides. So I flipped to being a venture capital investor. I think about 4 years ago or so, and so now I help others to have this moment. And actually, I'm trying to find this moment for myself also back again. So I'm always with the very close and with the founders that I support.
No, that's a great story, and that's kind of, I guess, closing the circle there, right? Like in some sense, you're coming back to the founder experience in some sense. Maybe tell us a bit about eCapital. Like, I mean, I kept it very short, so for those of you who don't know eCapital, I think it would be super interesting to get a bit more insights, like, you know, what you look for, how you structure it, what you're excited about, some trends you're seeing, and then we can dive a bit more into that.
Wow, this is I can talk for hours about, you know, all these questions you just asked. So let me talk about eCapital with a few sentences. And also the reason why, you know, when I flipped sides, you know, I'm not the founder of eCapital, right? So I'm a, you know, general partner, but I decided actually actively for eCapital. There are, well, as you know, many fund managers around. But eCapital is one of those fund managers who's around for more than 20 years. So we are, you know, one of the, well, of that generation, whether it's the first, second, or third generation of VCs in Europe is another question, but of that generation, so been established like in the 90s. So for quite some time, and eCapital has always invested in deep tech companies. So there was a phase when where there was a clean tech focus. There was a phase when there was an enterprise SaaS focus, and still is. There currently is a phase where we have a very strong cybersecurity focus, and so we are currently in raising our new fund, which will have a deep tech focus, deep tech B2B, sustainability, cybersecurity. We look at impact to help supporting the United Nations SDG goals. So we've always been like a deep tech investor, and deep tech means for us, of course, deep tech innovation in like software, but we also invest in companies that find the next like material to produce the next generation of memory chips. So we have a very broad portfolio there, and with this comes the experience working with this kind of companies, right? Like deep tech companies, very technological. So we always look for a technology USP somewhere deep in the product. Sometimes this is even patented, so the intellectual property is secured. Sometimes it's not, but we always look for this deep technological like core somewhere. And this very well resonates with me because, as you said, Rasmus, I'm an engineer by education. I'm even an engineer by heart, I have to say. So therefore, I would like, to be, and my colleagues as well, like, the best VC partners for engineer founders. And so eCapital, today is investing out of, we have close to 300 million euros under management. We invest early stage, sometimes seed. In the last years, we've done more seed investments than we've done in the past, and then we will do in the future. And we have, as I said, these focus areas. We invest geography-wise in the German-speaking countries and in Europe. So we have a number of like European investments in Spain, where I am currently, in Italy. So the country and the location does not. I mean, it increasingly does not matter that much as it has been in the past. And so. This is more or less eCapital. We are based, and this is also I don't know whether it's a fun fact. It's a fact. We are based in Münster.
It's a bit of a fun fact.
I think we're even the only VC based in Münster. But I can assure you, we are spread around, and so we have some rooms in Berlin here. We have some stuff in Berlin also. So, but this is interesting. A strong technological background, strong techno background. And when I moved on the other side, indeed, it was a dedicated cybersecurity fund that was super unique in Germany and in Europe, which attracted me, because that was the network actually that I had grown in the last, I don't know, 10 years prior to that.
No, that gives a great overview, and I have like actually many questions. But before I ask them to everyone who's listening, feel free to put any questions in the chat you might have already, and then we can collect them, or I can fit them in. And obviously at the end you will also have time to ask questions via voice. But I think, yeah, just put them in as they come, and then we can directly address them. Dirk, one question. I mean, you said you're obviously investing in a lot of deep tech companies. For some of the later stage stuff, I mean, yes, there will be revenue. There will be much more validation. Like, what do you look for? Like, what is the earliest people should approach you? Like, and secondly, what do you look for then when it's so early? Like, right, where it's just a team and maybe they've built a bit of stuff, but like, there's still a lot of open question. Like, what's for you this like trigger point where you say, if I see that, then I'm actually going really deep and do potentially an investment? Because I think that's quite interesting for many people in the audience, maybe who do like early stage startups, where they know that for a lot of these, more standard consumer or B2B SaaS plays where, you can all deduct everything from the revenue. It's a bit different for deep tech. So I think that would be super helpful for everyone.
Yeah, it specifically in the early phases, as you said, Rasmus, it is very special. Let me put it this way: to actually decide for becoming a partner in this, specifically in this phase. You are rather a partner than like a pure investor, because you are expected to, and you actually have to, and you are helping a lot on all different kind of aspects. So in the end, what a company and what especially a startup, an early stage startup, drives is the people. You've mentioned this already. The team, obviously. I mean, you will hear this from every VC, from every investor particularly at this early phase. You look at three things: the team, and number three is the team as well. So you are really looking for people who can make a difference, and make a difference because they have a drive. I always say I look for like competitive athletes. I look for those who really want to win like the Olympic Games, who really want to do something very, very special, and who are not hesitant to actually hold on for a long period of time. So if you are starting a deep tech startup, it depends on the area. It depends on like the timing of the market, of your customers. You will fight with and for your startup for many, many years. And the very early investors, they might even survive your marriage. I always say, people say it's like you get married. No, it's stronger. You can get divorced, not here. So it's a very, very important decision. So there is obviously the founding team, which is super critical. And I was already mentioning this unfair advantage. It needs to be somewhere. It needs to be with with an invention or a certain innovation, something that has not discovered before. What we and I specifically like is if the founders have experienced a certain problem, which they couldn't solve without the innovation that they are now trying to build the company for. And so this is something that we always look for. Then of course there come many, many things. So of course, you have to have an idea about whether it's a market at all that the innovation is actually aiming for. And at this very early stage, it is very difficult. The timing question is very difficult. But if it comes to like later stages, timing, from my experience, is typically underrated. The importance, it is super important. Different all the timings that are involved here: timing of the markets, timing of the customer, timing of the product, timing of the competition. Even in some cases, even the the timing of like the personal stage, like of the founder, where he is in his life, right? Or in his or her life. So this is all important. And, but yeah, in this very early stage, indeed, it's the founders.
So, but like how can the founders show you that they are these athletes, like, or us the other way around? What are the proxies you look for? Because like, is it just your intuition, or is there certain like kind of proxies you're looking at that basically tell you, okay, this person really wants to win and go big?
I give you also a more elaborate answer here to this, because what we are investing typically in Series A, which means there is customers and there is revenue, right? We did some seed investments in the last couple of months, where you already expect like at least, if a first customer, let me put it this way, and the first sellable product. So, if you don't have, revenue yet, and you just have an idea, that would be something where we would, or I would specifically engage with the founder over a longer period of time. So I would rather, keep the contact a little longer and, be updated from time to time, which might take, I don't know, half a year, sometimes 1 year, sometimes 1.5 years, to get an understanding of, if it's really, serious that this entrepreneur is actually really going to start the company, going through all the hassles of, anything that goes wrong, that might go wrong, will go wrong. And so that's what I would do is I would, work with and be, stay updated over a longer period of time. There was one investment that I did, and I don't disclose which one it was, but there was one investment where I actually reached out to the founder in a very, very early stage, because there are some areas where you, or specifically I or we, have a very good insight about the market, where we proactively actually approach founders or individuals. It happens rarely, but if there is a space where we say, well, this is an area of innovation where we really want to be invested in, then we reach out to people. And so there's a real example of a guy which actually had been a founder very early, very, very early, when we were watching them, and so over time, then in the end, we're the first investor in that company. So learning, how the founder actually, is managing all the first challenges, how the product is evolving, how the idea is evolving. So this is something which takes some time.
Yeah, and no, that's very interesting. And so I guess that way it's also good to, if you get messaged by Dirk, then it's probably good to pick up the phone, but also engage with you early, so that you can start building a relationship and ultimately can develop the conviction there. One question probably everybody discusses these days, or especially in the last couple of months, like what's your view on macro right now? And especially for maybe more broader for the venture capital landscape, but also for your investment style. Like, has it changed? We all know since earlier this year, markets have changed a lot. Multiples have gone down. Some people have lost a lot of money, at least on the books. Fundraising is getting harder. So what's your perspective? Like, what's the situation right now in the market? How do you guys behave? And also, I guess, looking into the future, like, what's your perspective on the next couple of months, and also advice ultimately for founders? Hard question, I know. You won't have the perfect answer, but I think
I have several answers.
Perspective.
I think the truth lies in several answers, actually. And I have to say, I'm not an economist, right? So it's my personal perspective here that I share with you. There is a very, very simple answer to that question. And, I will give that simple answer, and then I will elaborate a little bit more. And the simple answer is, if you want to get an idea of, how, from my perspective, the startup and the, financing, this VC landscape will look like in, I don't know, next year, in a year or two from now, right? Look at pre-pandemic. just erase the last 2 years, just forget them, because they were so unrealistic. Let me put it this way, right? So we have to be honest with ourselves. We had some effects in the last 2 years, which are very, very rare. So, there were investors coming from different kind of places, from private equity, from, growth, who were investing very, very early, lots of money. So we had, the valuations, obviously, that's also part of your question, right? They were in some cases even outrageous, I would say. So my best advice here to get an idea of what is going to happen is to just forget these 2 years. And if you do that, the observation that valuations have crashed looks a little different. Because, I don't say they did not go down, and there are many, many macro effects that are currently affecting us. Certainly, prior to the pandemic, there was no war. No real war in the Ukraine, and many, many other things. But if you compare the situation today with 2 years before, it is not that valuations have crashed by, I don't know, 50%, 70%, 80%. It is not, right? So they are, if you look at all the metrics, they are in the same range. They might went down a little bit. It depends on the sector, but it's not catastrophic. Let me put it this way. So now let's give you the other perspective here, because obviously there are many effects that we are currently faced with. Each and every individual, has to deal with inflation. If we look at energy prices, et cetera, et cetera. So there are certain industries and certain markets which are, from my perspective and what I see, much stronger affected than others. So who is, very strongly affected? I would say everything that's coming close to consumer, because of the inflation, right? People are not spending that much anymore. So the closer to also, it's also feedback from our portfolio companies, which are mainly B2B, but some are closer to consumers, some are not. And the closer you come to a consumer, well, what I see, the more difficult it actually becomes, because they are not spending that much anymore. The second thing here is, the closer you come to industries that are deeply affected by energy prices, by the current level of the expected level of energy pricing, which I would expect not to come back to levels that we have seen, I don't know, a couple of months ago, beginning of the year. So there will be industries wiped out of specifically countries that deeply depend on industries that have a very high energy consumption and have no energy resources, except for the sun and the wind. But such as Germany, we have certain industries where it's very, very difficult right now. And so the closer you come to these industries with your product, with your solution, the more difficult it gets. On the other side, you have certain macro trends which are rather tailwinds. So if you look at the whole energy transformation, the whole energy transition, so there's lots of technology involved here. There's lots of companies who want to move the needle here, and there's a big wave. So we have tailwinds there. We have the other area, and I've mentioned this already when we were talking about how I came into the VC side, onto the investors side. Cybersecurity is a super big topic right now, right? So we are talking about how secure are our critical infrastructures. We read about this in the news, and even though it's always been there, so the need for reliable infrastructure, safety and security, it's always been there. But cybersecurity is a very specific market, because it works exceptionally well if you actually see what is happening, if things happen, unfortunately. right? So, and this is another wave that we currently see. So it's a very differentiated picture that we see. For us and for our portfolio companies, of course, if shocks like this happen in the market in general, and specifically also with the like entrepreneurial experience from the .com bubble, right, from that burst and from the financial crisis, you have to act, right? And sort of what we are having a very close look at with any company we look at, well, within our own product portfolio, but also with new investments, is all kinds of efficiencies that we look for. So we look at capital efficiency, we look for sales efficiency, we look for efficient growth. And this is something that you will definitely have to show today if you talk to your investors. Do we invest right now? Yes, we do. We are investing in, as I said, deep tech, B2B, and there are areas where some of them I just described, which we invest into. Do we do it at a pace that we have done it in, I don't know, the last 2 years? No. So it's certainly got smaller. But you can still fundraise. So we have some of our portfolio companies are currently also, raising rounds with new investors. So it's happening, but you have to differentiate.
Yeah, no, that makes a lot of sense. So I guess I guess it's hard now to choose for companies that already exist, their industry, but I guess some can maybe slightly pivot, and also for people who want to start new companies, it might make sense to think about the new reality, and based on that, maybe also, think very closely about like who are the customers, what is the market I'm in. But yeah, great to hear that you're continuing to invest despite lower valuations probably and slower pace, as you said. So that's
well,
great.
Despite lower valuation, this is actually one of the interesting elements of the current situation. So of course, for us, I mean, as an investor, if we make an investment, any investment in a portfolio company or in a new company, of course, we have to make a financial return for our investors. And so certainly this is something that we have in our minds. But when we talk about like entry valuations, we also have to talk about like exit valuation, and the exit market certainly is very difficult right now. It's very dry. Yeah. It's very dry. Yes.
Yeah. And maybe one last question around this whole like macro situation. Like, what's your view on like when will this change? Like, do you think it's going to stay like the multiples just going to stay like this? Do you think it's going to go even further down? So better raise ASAP, or no view?
Actually, I think I gave the answer like a couple of minutes ago when I recommended actually to like remove the last 2 years, right? So it's you have to look at the levels of valuations and the amount of capital that's actually being deployed. It's at a very reasonable level right now. If we look at the investors, at the VCs, they have a lot of dry powder which they collected in the last 2 years. So it's not as bad as an environment as we often talk about, right? It's just that right now everybody we need to understand and see how this whole macro situation is actually be sorted out. So this is something where everybody is being a little more hesitant, looking at the existing portfolio, waiting, or doing whatever we can do about like the global situation to become more stable, and then face the new reality. But that's the situation we're in. So I think that's something we have to live with. And again, it's not a bad situation as it has been after the .com bubble burst. So that was a very, very different situation.
Yeah, no, that makes a lot of sense. And I mean, as you said, that's very consistent to what you said before. And I think like this idea of deleting these 2 years is I think like mindset wise makes it some way like a much more positive way also to think about it, that we are actually maybe in just quite a healthy state at the moment around this. There's actually already quite some good questions in the chat, so maybe we start with that already. I mean, I have many more questions, but there was one question from Elena asking around kind of what kind of revenue, MRR or ARR, so monthly recurring revenue or annual recurring revenue, and as well as customer growth, you kind of look for. What is kind of the starting point there where you say, look, like this is interesting?
So I mean, as I mentioned, we look at companies in the early stage, Series A. We expect first customers. So we expect that they have, that your product is in production somewhere. And this typically translates into either, a certain, level of users or usage, or, and that's the easy metric actually here, a certain revenue, right? If we look at SaaS companies or recurring revenue, it's the magic million, right? That we actually look for. But it's a more elaborate answer because some of the companies we invest into and we look at, they might, have reached a certain stage and might, have, very little revenue, but have, 100,000 users because they have an open source based PLG kind of business model. So it certainly depends. Others have, if we specifically look at some of the, super exciting segments, coming closer to the silicon, right? So doing semiconductors or new materials for like new chips. So it's a very different story. So they might not have revenue at that stage, or just, co-development revenue that they are getting through the cooperation with some of their partners. So it depends. But if you're a software, a SaaS company, B2B, we expect customers, we expect, visibility of like the $1 million and like ARR, and that would be a good stage where to talk to us.
Yeah. And in terms of growth, like, I mean, I guess if there's a company that just has a few 100,000, but it's growing very quickly, is that also something? Like...
At this, yeah, sure, certainly. I mean, we are not investing in the status quo, right? So we are investing in the future always, and so growth is super. I mean, yes, it's super important. So it's even more important than like the pure number where you start. The only reason I'm mentioning this million is because you typically have in this case, at this stage, something in production. So something is really being used in production for the purpose it's been built for, and you have real customers who went through a purchasing decision, right? Yeah. And so this is something that we look for. And again, it's B2B. A purchasing decision in B2B is something different than in a B2C, where a consumer is, very easy, comparatively easy, not to crack, so to say.
Maybe a quick follow-up question on this. Like, I guess you have some companies that are doing more like enterprise deals or big co-development agreements, where maybe one single customer can bring a few 100,000 in revenue or even in the millions from very early onwards. But you might also have companies, right, that have maybe much smaller tickets initially, but many more customers. Like, how do you think about that? Is there something you like more or less, or?
We like both, actually. It's we like both. What typically happens, I mean, with the it's as I said, we are looking at deep tech companies. Typically, our entrepreneurs, they have very innovative products, and initially they sell them to very sophisticated customers, right? So the first customers are very sophisticated, and over the time we already know this typically, and work on this together with the entrepreneur. And typically the thing is to actually scale it or scale it for a larger market, which then goes hand in hand with more dedicated product more to specific use cases. Typically this leads to like more customers or a bigger market, and also with than typically smaller ticket sizes. But this is something that we like, and this is something that is the part of the normal process. For us, it is important that the market is sizable enough so that the company can become a significant player and dominate a certain field, which needs to be defined certainly.
Yeah, no, that makes sense. And on the next question from Hendrik is around your thoughts on building a company in Germany and or Europe, and how is it here to basically build and scale a venture, maybe also to other regions? What's going well, what's going not so well, what should be improved? So also here first, I think it is very worthwhile to build and start a company in Europe and in Germany specifically. Giving this as the first part of the answer, of course, many things need to be improved, and we can start at education. I don't want to repeat everything that's already been discussed, within the Startup Verband or any other groups here. I think what we also have to see is we were talking about growth when we talked about the other question. We also have to see the dynamic which things have changed in the past, and what we have already reached from where we came from. So the current situation actually, if we compare it to the past, and the earliest or the latest past, that I can compare it to is the 90s. So it's uncomparable, right? So we have serial entrepreneurs now. We have the infrastructure. We have actually VCs in Germany. We have the US VCs coming to Europe. And we have the challenge of specifically growth money from European sources. Actually, this is a more political challenge here. But for the entrepreneur, it's the best time actually to start a company. If I look at comparing Europe to other regions or other countries, the obvious comparison here is to the States, right? So that's something I think that's what's actually been asked for. I can give you only a limited answer here because I have not started the company in the States. Even though my first startup, we actually did a flip. So we've been operating in the US mainly actually. And of course, I am working with entrepreneurs who are very successful in the States. But it's also a very different animal in the US, right? So if you look at the cost as one example, right? Still today, or specifically today, it can be much more efficient actually to build a company in Europe, and we have many great examples for doing this. Having started here, becoming global, typically going to the States first, and then becoming global. But having specifically a technology company being built in Europe, I think would be a very, very good decision. And specifically if we talk about technology, because we are, and now let's talk about Germany. We are known for German engineering, in the whole world, and so there is something to that, which also means it needs to be complemented by other traits. So typically, we are not as good as the Americans in marketing, right, and sales. So that can be combined, but building a technology company in Europe is terrific. I would do it. Yeah, no, that's a great motivation for anyone, I guess, who hasn't started one. And I mean, also great to see that you back many companies here, right? And develop the ecosystem. And I think it's true. I mean, I don't remember the 90s that well, but it must have been a very different beast in terms of the support infrastructure you have to start a company. So I guess again, it's about putting it in perspective, similarly to your view on the deleting the Corona time. It's all a matter of perspective and that gives it a much more positive connotation. Alexander had another question. He mentioned, that you mentioned that the companies you want to invest in require a certain type of efficiency and need to show efficiency. I guess efficient sales, growth. So could you elaborate a bit more on that? Like, what does that mean, efficiency, and what are some KPIs you look for there?
Yeah. So what we are specifically looking for is a mindset of efficiency. What that specifically does mean is that we are not looking for companies and entrepreneurs who develop stuff or acquire or buy, purchase market share more or less at any cost. So runway is always one super important, or maybe the most important metric for a startup, because in the early phase at least, the normal state would be to not survive, right? So you need to work to survive. So therefore, certainly runway is very important, and cash efficiency, sales efficiency. I haven't seen a metric on like development efficiency, but there certainly are metrics here. What we are looking for, especially, is this mindset, right? That you have this in mind, and if you are becoming, operational, more operational with product development, with deployment, with sales, with operations, etc., that it's ingrained in sort of your day-to-day business, that you measure efficiency and that you look at improving it.
Yeah, no, that makes a lot of sense.
So one example here, sales efficiency is something that's been becoming very popular these days. This is one of the things that certainly everybody's looking at.
Yeah. Cool. Are there any more questions from the ones that are not in the chat? Like, anyone wants to speak up or put something in the chat? The chance is now. Yeah, maybe think about it. I have actually one more question, Dirk. Is there like an area where you said, look, like you would love to see more companies there? Like, there's probably some people on the call that are considering starting a company. So what would be like 1 or 2 or 3 ideas or spaces where you said, look, like there's timing is good now, and maybe even like some problem areas where you say, like, I think that would be super interesting to look into. Maybe also focused on more around like data and AI, but maybe also beyond, if it's just all industries.
Yeah, well, thank you for giving me this opportunity. I think we have, over the last decades, even if I start with technologies such as MP3, which obviously is an audio codec which has enabled whole industries, right? Developed at Fraunhofer in Germany, and then licensed to, I think it was Thomson or Sony, who actually who made it really successful. What we are deep tech investors, so we are really looking for game-changing like innovation, and we see too few actually companies, not just innovation. We are great at creating patents and innovation, but this needs to be translated into companies, specifically and in the areas of like new kind of computing infrastructures, next generation of chips for all these different like kind of new purposes. AI comes into play here as well. And certainly there are chip architectures dedicated for AI, but what's now happening is that you have all these different kind of use cases. And so if I could have a wish, then it would actually be transforming like more kind of innovation and invention actually into real companies who actually commercialize the stuff that has been invented at our universities and research institutes. So this would be something that I would actually be more than happy to, and then talk to us. We understand what you do.
Yeah, and I think that's, as you said, that's a big challenge, I guess, especially in Germany and Europe, right? Like there's great research at universities, but like this translation is just not as good. So I think if we can somehow fix that, that will create a lot of very valuable deep tech companies. So yeah, there's a few structural things I guess we also need to change in universities and spin-off processes there to make sure that turns into real companies.
May I, Rasmus, may I ask you a question?
Sure.
It's a fireside. I tried to arrange it like a fireside, but there's no fire burning here, just in my heart and yours, I guess. Yeah. I'm, we know each other for a couple of years, and I was so excited about the idea of Merantix, about the whole concept. So how are you currently, in this current situation, with, all the macro effects that we talked about? And so what's your perspective? I mean, you have a couple of companies in your portfolio and you have your pipeline. So what's your perspective here?
Yeah, I mean, it's a good question. I think it's a few different things. So firstly, we really have an even stronger focus on what you, I guess, mentioned as efficiency. So really thinking about like what is the most efficient way to launch the first product, to acquire the first customers. And I guess before that, we thought about every new hire like once or twice. Now we think about it 3 or 4 times. Any other thing that is a cash out. So I think that's one thing. And with that also related, focusing, having the companies, even if they're deep tech, focus even more on revenue, and having that really as priority number 1, 2, and 3, because also the requirements are going up. And for that, also looking at cases that can potentially monetize quicker. I think also if you think about AI, I think the age of just doing a pure, like, we have a bunch of smart AI people and raising money on that time is a bit over. Even maybe that's even not that just correlated with the macro. So as such, like for new venture cases, I mean, we're just spinning off a new company this week. I mean, they have a couple of companies signed as customers. They both pay upfront as well as the subscription. We haven't written a single line of code yet. And that gives great validation that what we're building there is, and we will build this in the next couple of months, and they know that, but that gives great validation for the fact that we actually build something that is really market. So, and I think there we try to be even more strict. But generally, I mean, we're very conviction driven. We make relatively few investments, and so it's also similarly to how you said, okay, let's re-raise the time looking back towards Corona. I think it's also the same looking in the future, right? Like yes, the next 1 or 2 years might be a bit more choppy, maybe even longer, but if you look at 10 or 15 years, it's very clear that AI will disrupt healthcare, that we will have new compute infrastructure, that cyber globally will become a more important topic, that biotech is taking over both the chemical industry as well as pharma, and compute in that context. So I think sometimes then it's like, okay, yeah, next 1 or 2 years don't look that good, but if I look at the same case over a 10 or 15 year horizon, I'm like 100% convinced that it will happen. And then it's just a matter of what you said is the most important question, like, do I have the runway to get there? And that means, maybe shifting some milestones around. But I mean, we also don't know what the future is going to be. So in some sense, then it's also really about like, setting ambitious goals short-term and executing and focusing.
Cool.
Great. I mean, I think how should people reach out to you? I mean, should people add you on LinkedIn? Should people send you an email if they have a question, if they have, like a company they want to show you, like what's your preferred way of getting in touch?
How many people do we have in the audience?
Like 25 right now. So.
Well, the best way to reach out to us is to send us an email. Yeah. That's the best way.
Great. No, so yeah, let's do that. Yeah, no, great. Thanks, Dirk. That was a really good conversation. There's probably many more topics we could cover, but I think it was a great kickoff. And I'm sure there will be some follow-ups also from this. And yeah, hopefully see you next time on campus again, and have a good time in Spain until then. Thanks.
We will. Thank you so much. And again, it's been an honor to be the first one in this new format. Thank you so much, guys.
Thank you very much from the campus side as well, Dirk and Rasmus, and for everybody who came here today. And also, please let us know what do you think of these talks. We left a link here on the chat, and also check out our website for more upcoming events and the series. Of course, we're going to bring other VCs to give us their perspective. And thank you both very much.
Thanks.
Thank you.
Bye.
Have a good day. Bye-bye.